Hello, everyone, and welcome to the TDK Ventures Energy Week 2022 panel session on the future of emerging market electrification, where we will discuss a variety of topics regarding energy transition, mobility models, electrification, policy, and many more things. We just witnessed such an insightful conversation with Rick Needham, and hope everyone who attended that session really enjoyed the conversation. This event is hosted by TDK Ventures, which is the corporate venture capital arm of the Japanese electronics giant TDK Corporation. My name is Siddharth Mehta, and I'm an investment director at TDK Ventures based in the Bangalore, India office. I lead our investments in logistics, fleet, and digital platforms across agri-tech and industry verticals. It's an honor for me to have such an esteemed set of panelists, and I'm delighted to introduce the group to you today, starting with Sofia Nadur. Sofia is the managing director at BP Ventures. BP's purpose is reimagining energy for people and our planet. At BP Ventures, she is focused on new business models and deal sourcing in the areas of electric mobility, clean tech, as well as disruptive tech and business models that will help decarbonize cities and companies and will help deliver systemic efficiencies and resilience in both rich and poor countries. Her target geographies of investments are India, elsewhere in Asia Pacific region, Middle East, Israel, and Trinidad. Welcome to the panel, Sophia.
Thanks very much.
Next up, we have Tarun Mehta. Tarun graduated from IIT Madras with a degree in engineering design. He conceptualized and started Aether Energy in April 2013. Aether developed India's first electric scooter that aims to revolutionize the whole two-wheeler driving experience in India. Tarun was also listed on the Forbes 30 Under 30 in 2018 and 40 Under 40 in 2017, 2019, and 2021. Glad to see you, Tarun.
Thanks, Siddharth. Pleasure to be here.
Next up, we have Akshima Ghate. Akshima is the managing director at Rocky Mountain Institute, where she leads the research, analysis, and partner engagements. She provides leadership to RMI India on ongoing initiatives with governments, agencies at both national as well as the subnational levels, which also aims to transform the mobility trajectory of the Indian cities to a more shared and more cleaner centric path. Welcome, Akshima.
Thanks, Siddharth. Looking forward to the discussion.
And last but not the least, we have Helen Lin from Edmund Ventures. She's a partner there where she invests in and builds portfolio companies that renders humanity a very net positive impact to nature. At One seeks innovative techs that can really upend the traditional industries contributing to climate change with very disruptive unit economics, both commercially as well as environmentally. Glad to have you, Helen, today.
Glad to be here. Thanks for having me.
Fantastic. So we have all the panelists on the screen now, and it's so wonderful to have you all here and share your views and insights on this very important topic regarding the emerging markets, especially focusing on the whole electrification journey. Panelists, this session will be around 45 minutes, and we will reserve few moments for the audience questions at the end. We have such an amazing wealth of experience from these panel members across the emerging markets, and I'm really looking forward to a very lively conversation with each one of you. With that, let's kick off with the first question. As you all know, the whole electrification and the electricity generation market is very much evolving. What is your real view on the generation side in the global emerging market, and how is the different generation models shaping up with newer and more cleaner forms of electricity coming online? We have a huge mix of wind, renewables, nuclear, hydro coming online as well in this whole space. So can we have a quick chat on how the whole generation model is shaping up in the emerging markets? Sophia, would you like to go first, given BP's wide experience on the generation side and the whole upstream of the power generation?
Hi, everyone. Afternoon. So BP is an integrated energy company. We began life as an oil and gas, but because people for decades have wanted affordable, convenient, and reliable energy. And that's why we've persisted in the business of offering people exactly what they need. Now, a few very big mega trends happening. One is around obviously consumer need and the whole desire to become net zero, to reduce our carbon footprint in the face of climate change. And so there was a huge pressure by governments and by consumers to look not just for affordable and reliable and convenient energy, but also clean energy. And also what we're seeing as well is the cost of this energy from a generation point of view is decreasing significantly. And so there is a desire by companies of all types, including BP. We have made a clear commitment that we will get to at least 50 gigawatts of renewable energy in terms of generation by 2050. We expect that we're already at above 20 gigawatts of renewable energy derived from wind and solar primarily, and we expect that we will see even more options for generation coming on stream, both onshore and offshore in terms of wind generation and also for solar. This is the case across the world, be it the UK, the US, India, China, and other markets. You're seeing this demand. And also because the cost of energy, particularly from renewable sources, is declining so significantly, there is even more encouragement to go faster and to ensure that it's not just around the business models that are trying to enable cleaner transport, but also on the generation side, you're making sure that you're pulling through as much clean energy as possible to ensure that you've got a net zero offer from start to finish.
Now, this is very excellent, Sophia, and maybe I'll loop in Helen on this conversation because, Helen, you come with a lot of Africa experience, and I know things are slightly different in that continent given there's a huge population which is still not linked to the grid. So what is your experience of the generation side on the emerging market, especially on the African continent, and how is the government and the policy side kind of reacting to that space?
Yeah, it's a fascinating quandary to contemplate in that market because in some countries, and of course, not every country in Africa is the same, but in many countries on the continent, you have something like 80% of the population that are living off grid. And while the grid that does exist is currently in some of these countries quite green, for example, in Kenya, you have around 75% of the grid there that comes from renewable energy, largely hydropower and geothermal, and then an increasing amount of resources coming online all the time with solar and wind. But then what about everybody else who's off grid, right? One of the countries that's largely off grid is Uganda. Very rural, agricultural, huge swaths of land that are quite remote and empty. So there, people are much more reliant on self-generation. And so you've seen a lot of the proliferation of residential solar systems, which turn into more of a fintech play than an energy tech play. Because it's just about launching things like pay-as-you-go systems equipped on the hardware with the automatic shut-off if the loan isn't paid, and those kinds of mechanisms to help proliferate affordability and therefore adoption of solar energy. So I think there has to be basically very customized solutions to every market that need to overcome the challenges of affordability and distribution, right? Because you can't have all these solar systems distributed everywhere and then have a problem of, well, who's going to go and do the maintenance and the repairs if those systems break down? Who's going to go pick up those systems at end of life? And so you have to tailor these more technology enabled and automated solutions that are fit for purpose for those markets. But if you do, you get this interesting groundswell where suddenly you're electrifying big chunks of the population that previously did not have access to it.
Now, this is very excellent, Helen. I'll just double click on a few of the bullet points you mentioned, especially around the whole fintech revolution. How do you see the fintech revolution also playing in some of the downstream of electrification, be on some of the emerging markets for electrification in those geographies, or maybe regarding some of the mobility models as well? Because fintech does have a very strong element there. What has been your experience you would share on that?
Yeah, 100%. We actually have a portfolio company in Kenya called Rome Motors, and they do electric motorcycles and electric buses. And they're a very interesting case study of exactly what you just described. EVs in general are actually more expensive upfront to purchase than an internal combustion vehicle, but cheaper on a total cost of ownership over the usable life of that vehicle because the electricity is so much cheaper to charge the vehicle than fuel. And certainly in markets where fuel is imported in and very expensive, that is true. The problem is in cost sensitive markets like in Kenya, that higher upfront cost can still be prohibitive to adoption. And so enter the fintech solutions, right, to help defray that cost. Because even if the total cost of ownership is 50% cheaper than internal combustion, which it is for an electric vehicle, that upfront cost is still an inhibitor. And so you can defray that over the life of the vehicle with an interesting fintech solution. So our portfolio company has partnered with a large asset financer called M-Kopa, who originally started doing these kinds of fintech solutions for residential solar systems. And now they're branching out to things like refrigerators, energy solutions.
Very excellent. And I think I will absolutely be discussing more about mobility in the due course of this panel. But maybe shifting gears a bit and focusing a bit on the policy side as well, because policy is such an important lever in the whole generation side. So, Akshima, would you like sharing some of your experience of how policy is shaping up some of the generation dynamics, maybe in India or some of the other markets you have seen?
Thanks, Siddharth. I think Sophia put it very beautifully. When it comes to generation mixes, it's really two, three mega trends that are driving the whole market in terms of generation mix and how it's emerging. It's decarbonization, it's cost decline. And in India, when I'm looking at it, I'm looking at this whole increase in energy demand as a key driver in the context of energy security as one of the biggest concerns that is more global. So in that kind of a context, when I'm looking at policies really driving the generation mix, I think most of us are aware that to drive the power sector decarbonization, India has declared a target of meeting 50% of its power generation capacity from non-fossil fuel-based sources by 2030. This is also true, I think, for many of the emerging markets where there is an increasing intent to have more non-fossil fuel-based sources to generation mix. And as meeting these targets will hinge upon more RE adoption by individual states in the country, there have been interesting policy levers that are being deployed, that are being used to shape the kind of generation mix that we are targeting at a 2030 horizon. Some of these include the power in India prescribing specific renewable purchase obligations for states. Also now, for the first time, we also now have a battery storage purchase obligations for the states. So that's interesting. On one hand, there is a target. At the other side, we are using policy instruments like renewable purchase obligations, battery storage purchase obligations to shape that market and drive that market. We're also seeing interesting policy levers like market-based economic dispatch mechanism, which will enable states which are today low on RE resource potential to procure RE-based electricity from the wholesale market, which will expand the balancing area from the state boundaries to more of a national boundary, and this will allow more significant higher penetrations of RE across the country. In fact, when I look at coming together of the generation mix moving more towards RE in India and more electrification happening in transportation, the recent green energy open access rules that our Ministry of Power now allowing consumers with loads greater than 100 kilowatt to purchase green energy directly from the RE producers. So this is going to be really interesting and beneficial, even when I'm looking at electrification of transportation, where more charge point operators with loads greater than 100 kilowatt now have an option to procure green energy beyond setting up just on-site RE generation assets to power their charging stations. So again, I see an interesting role played by the policy here to shape up the market and drive that market, both from a generation mix and also its uptake in an emerging electrification sector, which is transportation in the country. We have some RE-based EV charging pilots being deployed in a few cities, but there is need for more policy experimentation to drive that uptake. There is a role for experimenting things like market mechanisms like peer-to-peer trading or enabling virtual net metering, etc., which can really ensure that there is an uptake, and hence we kind of playing together both with the generation mix and the uptake of clean energy in the sector.
This is excellent. And I think it's a very great and positive move, which a lot of the governments of the emerging markets are doing, where they're enabling a lot of these electrification trends and they're putting up incentives and positive measures to support this. It's really good to see this moving, because investments in this space will play such a key role in defining how the whole journey of the electrification kind of shapes up and what kind of key trends come up in this whole journey. So maybe I'll go around the table on this one as well, because I know each one of you will have great insights to share on the whole investment trends. some of the key themes and the thesis which we all are observing on this space. So maybe starting with Taro, you are in the middle of these things, being a startup and raising capital. What has been your experience of the key investment trends which are following up in this sector, and where do you think the real focus is? And what are also some of the areas where there's a less focus, but they need to be mainstream now?
Thanks, Siddharth. So, at least in India right now, there is a very clear central government push towards green energy, and everything associated with it has a very clear long term success metric around it, whether it's electric vehicles, storage. We believe at Ather that by the end of this decade, with the majority of vehicles being electric, the requirement of electricity by EVs during 8 p.m. to 12 a.m. So duration will be roughly about 400 gigawatt. That's exactly the same as India's total energy capacity today. So interesting storage solutions, interesting IoT, interesting technology directions, balance this load, distribute it properly. I think a lot of these are getting the right kind of attention now. These in particular are pretty hot in India right now because India is just in the middle of a pretty massive EV boom, supported by the highest government push the world has ever seen for light electric vehicles. We've seen over the last 18 months, EVs go from roughly about 1% penetration in new sales to last month, roughly about 13% penetration in mopeds and roughly about 6% penetration in overall two wheelers. So there's been a huge growth. This is definitely a pretty hot sector right now as far as investor interest goes. Sectors that should get attention are a lot of the adjoining sectors. I'm really hoping to see a lot of capital getting committed towards battery production. It's a super major area, whether it's electric vehicles or a lot of new approaches towards how we do load balancing. In general, whether it's stationary power storage or vehicle storage, batteries are a pretty massive area, and I think they've still received only limited attention and limited capital in India. Home charging is another area in this space that's at a very early stage. I know some of the folks here, their companies have started committing sizable capital to it, but it's still very early stages. India is going to have roughly about 300 million two wheelers and roughly about 50 odd million cars. All of them will need home charging. India is not going to be a network of public fast chargers, but somehow most initial work goes towards public charging. Home charging is a pretty massive opportunity, and I think it's one of those areas which has seen less interest till now, but it's going to be a pretty big part of what attracts capital over the course of this decade.
No, absolutely. And I can imagine, because some of the challenges the investors also face is how do you monetize some of these opportunities like home charging, which may not be feasible as of now.
It's very much feasible. You're right. I think the key problem that almost everybody has is how to monetize. But yes, people are going to be using it, and maybe you're not monetizing the usage, maybe you're monetizing access, but there's a very clear requirement out there.
True. There's a clear demand. It's just that how do we structure the best business as well as technical model, I think would be the key in this case. I think maybe looping in Sophia, you have a lot of experience in this domain across geographies in the emerging markets. So do you think, is it like similar theme in multiple markets, or India is different, or APAC is different, or something is different in Africa?
Okay, I'll say a couple of things. So one is Arthur D. Little did an interesting market readiness. And of course, Norway is at the top. I mean, Norway, you're getting 77% of new car sales being battery electric vehicles. But behind that list, you've got a list called Ambitious Followers, where you've got China, Germany, UK, and Singapore. They're calling emerging EV markets the US, Japan, Ireland. And below, that's where India sits. So India sits in this group where you've got Mexico, Brazil, Indonesia, Vietnam, and South Africa. But my view is that don't let these indexes fool you. I'm with Taron in this case. We're seeing a huge explosion in a good way of electric vehicle. I would say interest in electric vehicle. There's now a really customer readiness around wanting electric vehicles. But in one way, I disagree with Taron. I think in markets like India and also Vietnam and Indonesia, I don't see home charging being a really what I would call low hanging fruit. We see this in other developed markets. Having visible public charging infrastructure is critical to make people believe that this is real and this is sustainable. And also the other thing is my view is that I think private EV ownership, be it two-wheelers or three-wheelers or four-wheelers, is important. But if we want to manage congestion and pollution across especially urban areas, we've got to really look at how do we incentivize fleets to be able to not necessarily to have, let's say, mass adoption of private vehicles. That just makes a problem. It doesn't make the problem go away. You still end up having loads of congestion issues. And so I think my view is that, and that's why you've seen us support Blue Smart in their early funding last year. And we will announce soon some additional funding for another fleet as well. We see fleets and encouraging fleets to scale up and provide very good service, be it moving people, moving goods, being critical as well to, let's say, opening up the EV market to everyone. So not just fleets, but to private customers as well. But to your point as well earlier, is that I think digital tech is critical as well, and that's where India will dominate. We have a small investment in a company called PowerShare, been pivoted to doing energy storage, BPP, and BMS tech. And so you're seeing much more widening of technology options to suit not just the EV market, but the whole issue around circularity, grid modernization, energy storage. You're seeing a much broader tech sophistication. And that's great. What we're seeing as well in India is what I call fit for purpose business models. So it's not just, let's say, adopting what's in the new world or the first world, but creating business models that are really fit for purpose. So again, Blue Smart is another example. It didn't just adopt the Uber Ola model where you assume everyone has excess utilization just waiting to come onto a platform. In India, where you've got maybe 30 out of 1,000 people owning a private car, they've had to adapt a business model that fits, and that's why it's been well regarded. But there are many other models, and I'm also developing a business area, which I think is absolutely what is needed in India. And I think India will be a sort of a bellwether market for elsewhere in ASEAN countries, just because of also just the dominance of the OEM sector in other parts of the world as well, and even in Africa. So I think what happens in India is going to also help guide, help mature what's happening in Indonesia and Thailand and Vietnam and elsewhere. But I think a lot of the technology we're seeing now in India is really top class. And I tell everyone who listen now in BP and elsewhere that if you want to see what's happening in electric mobility, come to Delhi.
That's very encouraging. Thank you for those comments. I mean, there are a lot of fit for purpose. I liked your word, and we kind of see this as well. How do we make solutions which are really scalable at a low cost? And that's where countries like India are kind of succeeding a lot. So just changing our focus, we have discussed about India and APAC. I know Helen comes with a lot of experience in the African continent. So Helen, how do you see the trends on the investment side in broader on the electrification, maybe on the storage or maybe on the virtual plants or maybe on trading or on the EVs? Are they shaping up in Africa?
What's interesting about a lot of emerging markets, and I think Africa is included in this, is often they're going through some of the similar trends that other markets have already gone through. And so it's a common playbook, although maybe not the most genius playbook, to just basically play something that feels like it's a movie that you've watched before and you know how it ends. So if there's a certain like macro trend that you know played out a certain way in some other market and it feels like the Kenyan market or something else is maybe 10 years behind, you can kind of just get in on it and know how the movie is going to end. So it does help with the investment thesis. I would say that it is roughly 5 to 10 years behind in a lot of ways. I think India, at least from what we've seen, and defer to the other panelists that have a lot more experience there, but we see that they have a lot more advanced in proliferation of electric vehicles, certainly in micromobility, and therefore a more mature infrastructure for charging. For example, I think there's this kind of battle between chargers versus battery swapping, which is highly interesting. And we could probably have a whole dedicated panel discussion just on that topic alone, which I would love to be a part of. And in Africa, certainly in Kenya, you're just starting to see some of that come out now. And so whatever company is starting to enter the Kenyan market with an EV solution is basically having to parallel track both chargers and battery swapping to see what works because it's in that nascent stage. And they're kind of keeping an eye on India and some other markets where the movie is closer to the ending to see how things play out there. But what I really enjoy is watching the evolution of electrification because you start with things like, hey, let's electrify transportation. And then it's like, okay, right, we've done that. And now it's like, oh, shoot, now we have a problem with the grid. So it's like, okay, now let's everyone work on stabilizing the grid. So you look at storage solutions, demand response, smart grid software, and all of this. And then even from there, then you split into all these sub-segments of other problem statements. Within charging, there's the swap chargers, and then within storage, there's all these different things with storage. There's end of life that I think some people in the audience have already raised as an issue with lithium ion storage. It just keeps branching out into more detailed problem statements as you go along. And in the emerging markets, what I really enjoy is you have the opportunity to leapfrog over unsustainable development, right? Similar to how you saw in many countries in Africa that they leapfrogged over landline phones because it just didn't make sense in very spread out regions on the continent to have landline phones. So people just didn't have phones. And then came the advent of the mobile phone, where you just had to erect a cell phone tower, and suddenly, voila, everyone has mobile phones. We just skipped right over the entire era of landline phones. There's so much of an opportunity for that in a lot of emerging markets as well. Why does everyone have to go through a phase of individual ownership of internal combustion vehicles and then struggle with the transition in terms of like behavior change and grappling with like range anxiety or things like that to transition from an internal combustion vehicle to an electric vehicle? They're just going to go from not having a vehicle and being already accustomed to shared transport as their primary mode of transportation to now just moving directly to a world of shared electric transportation, which is where we should all be moving, right? Whether it's cars, buses, motorcycle taxis, tuk-tuks, doesn't matter. Ultimately, why does everyone have to own their own vehicle that's only 4% utilized because it only goes from point A to point B and then sits in a parking lot, which is what happens in places like the United States. And so I think that's probably the most exciting opportunity that we see as investors is that, yes, solutions that are definitely built for purpose. Thank you, Sophia. That's a perfect term. And also those that are built for purpose in a way that enable this leapfrogging dynamic over the unsustainable era of transportation and energy.
This is very excellent, Helen. And I know there's always this temptation to have this debate of fixed batteries versus swappable batteries. And I know a lot of our audiences would always be keen to hear the views of all our experts. So maybe we can take a few minutes to get 2 cents from each one of the experts on this panel on the difference between fixed and swappable batteries and where do you think the market is really heading. I think it will be different maybe in emerging markets versus developed versus cars and two-wheelers. So we can go around the table and have a quick chat on the fixed versus swappable battery approach. So why not start with Tarun, who is closest on the ground on this?
This will take longer than 2 minutes. So, swappable battery packs versus fast chargeable battery packs. There was a kind of a battle a few years back. It has sort of narrowed down largely towards fast charging now in India. I know it looks very attractive from the outside that India is a very chaotic market and getting a charger in every apartment complex is going to be super difficult, or every parking lot is going to be very difficult because the expectation is that, come on, like people riding mopeds won't even have parking. Except that's not true. It's actually not true. And unfortunately, it's shaped a lot for investors who come to Mumbai. And Mumbai is the worst place in the country. Nobody has parking in Mumbai, but that's literally one city in India. So a few things are different in India. First, um, almost all two-wheeler owners have some sort of a parking. Now, it may not be strictly legal, but it's also not illegal enough for anybody to really worry about it, which means there is a solution possible. The second thing that's different is India is a much, much larger market than any market where swapping has worked. So swappable battery packs have been incredibly successful in Taiwan, but Taiwan is a 1 million in year two-wheeler market, right? An extremely densely populated and it's few specific cities that really work there. India is a 20 million in year market, which is likely to grow to about 25, 30 million in year across roughly about 1,000 cities. So an infrastructure rollout would take so long that by the time you will actually roll it out, the technology becomes obsolete. And ensuring backward compatibility of battery packs over about 20 different platforms and what will be a 100 to 200 product portfolio of companies, and there will be at least 6 to 8 major companies in electric in India, is sort of a dictatorial measure impossible to pull off. That's what happened to swapping basically. While it made a lot of sense on paper, nobody could enforce it. So no two companies got together and ever standardized their battery packs. Even companies that created joint ventures did not standardize their own battery packs. And hence the market started moving towards fast charging and basically chargeable battery packs, because while chaotic, it's a solution that actually works.
Fantastic. It's good to hear views on the charging. And I know, Sophia, given your relationship with GeoBP and a lot of the swapping work, what they intend to do, you may have a different kind of logistic views.
Yeah, a quick comment on this. So BP has about over 15,000 charging units around the world, and about half of BP's global charging network is what we would call fast and fast. But actually, the 50% of this network accounts for 95% of all the EV energy that BP sold. And so, where there is fast charging, and I say fast, 50 kilowatts plus, where there's fast charging, it is well used. But this is more for developed markets, what I call so called mature markets, where there are bigger batteries on the road. So, be it passenger cars and also light commercial vehicles. India will get there. There will be a need for, let's say, smaller solutions for smaller vehicles. So when we talk about 3 wheels and 4 wheels and commercial vehicles, which are coming in the next few years, they are going to need fast charging. And the faster charging will make infrastructure players want to put more poles down and more units down because it's more productive to run. And the question is always utilization to be able to help enable the growth of infrastructure as quickly as possible. When it comes to smaller vehicles in India, and I think Indonesia and Vietnam and many parts of Africa, as Helen said just now, you're going to need the wheel vehicles. Is it going to be battery swapping? And to your point, Taiwan is not India. It's a much bigger country. And to be able to do that safely, because we've seen fires, unsafe practices with respect to battery swapping as well, but also even fixed charging, particularly around retrofit two-wheelers. So it's still shaking out, I would say, but I think as it matures, you'll see actually both models working. Battery as a service, where you have two-wheel battery being swapped safely. Because even in so-called mature markets like China, you've got battery swapping happening even in passenger cars. I do see that there is a role for swapping, but it's particularly around use case, and especially where there's no home charging, but also where these vehicles are not being used for personal mobility, but in use for commercial purposes. So I think it's going to be horses for courses, and I think you are going to see the need for battery swapping staying the ground. And as the standardization improves, you will see much more safe offers being rolled out.
I agree. And I know it's a hotly debated topic, which we can have a separate debate on. Completely agree, Sophia. I think it would be very use case dependent. Maybe for more B2B and commercial use cases, fleet operators, we can still go for maybe swapping. I think that's one of the important things. Helen, Akshima, do you want to share quick thoughts on this one before we kind of shift gears and move next?
Yeah, I can come in. Happy to make a quick intervention there. When I look at it from a perspective of how the entire ecosystem, at least in India, is evolving, to some extent, I do feel that we chose the winner from a policy lens. We chose the winner very early on, which was fixed charging. So far, I feel that the focus too much, if I look from a policy angle, has been on creating a widespread network of charging stations. And we've given limited attention to swapping as a technology solution and not given it enough equal playing field to emerge as or not emerge as a competitive solution. Because I do believe that policy definitely has had a role in deciding winners and losers. So it's time that we give that equal footing to different solutions and really have solutions that are technology agnostic. And in which sense, two-wheelers, three-wheelers, there are segments where perhaps the economics, the convenience to consumers perhaps will be better in swapping models. But I also feel that the way the sector or the market is so nascent as far as swapping is concerned, we should be very careful in how we move toward the swapping ecosystem. We are in India right now, we're creating a policy regime, a policy framework, how to promote swapping and bring it at par with fixed charging solutions. So I think we do need to be cautious in terms of recognizing the nascency of the whole swapping market right now and approach the whole problem statement in phases and have a very targeted approach towards that so that the end result at the end of the day is more convenience, better economics perhaps for certain business models which are picking up swapping as a solution.
Oh, fantastic. It's fit for purpose, safe battery operations, Maybe Helen, over to you for comments on this.
Yeah, I don't want to draw it out too long, and sorry for kind of hijacking the discussion with this topic, but it is super interesting. And neither solution is perfect, obviously, right now, nor should we expect either solution to be perfect at this stage of development in the industry, of course. I think the charger economics question in a lot of markets is still a big one. And hence, creative things and entry markets like route based vehicles. That's why we really liked buses as a starter market, because you know exactly where that bus is going to go, you know exactly where to plant your chargers and how much they're going to get utilized, and you know exactly what the payback is going to be. So things like that I think are interesting. Chargers equipped with storage on them so they can simultaneously also provide grid stabilizing services are poetic in a way, because they're causing a grid instability problem, but then they're also creating some grid stability solution at the same time. On the swapping side, the lack of standardization is certainly an issue, but we've also seen interesting solutions where people are trying to aggregate idle battery capacity at the swapping stations and use that also to provide grid stabilizing services. So I think there just needs to be another step of evolution where everything just matures and starts to address some of these pain points, and then we'll see. I think for now, you still need to keep pushing ahead on both of them in certain markets to see which ones are best suited.
Amazing. I think we have a very balanced view on this panel in terms of fast charging and swappings, and we can have a very dedicated discussion on this one. But this has been a very fascinating discussion. So thank you so much to all the panelists for sharing their very candid views and opinions. With that, maybe we can just shift gears. So we had taken a LinkedIn poll on a question which says, which vectors will enable a faster pace of electrification in the emerging market? So that was the LinkedIn poll question. And the options which we had given to the audiences were participation from corporates, tech or business innovations, favorable policy and incentives, or citizen movement and awareness. There was a very tough competition between the policy side as well as the tech and business innovation piece. Any quick views from our panel members on which policy incentives are one of the biggest enablers on this one? Or maybe you may have a very different option as well. I mean, there are only 4 options on this panel, but we can take option 5 as well.
I actually agree. One of the first things I did when I came into India was to go and speak with Akshima and her team. Because for me, understanding where we as corporates needs to invest to be able to scale up. I won't say the right business models, but as you said, there's no right answer yet, but enough options to be able to give cities and states good shot at electrifying as fast as possible and as efficiently as possible. So for me, the policy piece is a no-brainer. You've got to put that in place. You've got to have a very supportive regime in place to both encourage consumers to switch and educate them, but also ensure that you've got the actors in place, but also just having the right tech and business innovations. I think if I came here to India a few years ago, I wouldn't see the level of innovations that I'm seeing today. But you're seeing a huge level of innovation, partly driven by the policies, but also driven because everybody's just fed up with the congestion and pollution that they're seeing every day in, day out.
No, indeed.
Just to add here, I also agree. I think policy is obviously very important. I don't think participation of corporates plays any role. Consumers decide. And so I would revert tech and business innovations as basically one of the biggest drivers for electrification that we've seen in India has been consumers starting to think of electric vehicles as an upgrade for themselves. And now that we think about it, it's pretty obvious that's the only way electric has gone mainstream anywhere in the world with the exception of China. Right? So China's developed in a very different way, but with the exception of China, anywhere in the world, electrification is really, really kickstarted once consumers start thinking of it as an upgrade. And that's why vehicles positioned as a more aspirational choice or as a more premium experience, or not premium but as technologically more advanced, has been generally the starting winning strategy, and then it kickstarts a whole bunch of things. So you can call it tech and business innovations, more tech and product I would say than business at this point.
Yeah.
But the end result really is changing customer mindset, because changing customer perception. If consumers think of electric as something that they have to do to save the environment, I think we've got a 100x harder journey to convince them. But once consumers start thinking of it as an upgrade for themselves, that's when a switch suddenly happens.
Indeed. And Aksham kind of in the middle of these things as well. Policy absolutely stands out as one of the key enablers of the electrification journey. It could be on the storage side, it could be on the batteries, it could be on the EVs. What has been your mandate and thinking?
I agree with this. The outcomes of your poll and this pie is like reiterating what I wanted to say on this. I think policy in many markets, including India, has played a big role. I remember in India, 3, 4 years back, we were struggling to sell EVs. We were just in hundreds and a few thousands. And the market innovations, technology innovations, declining prices of batteries were not helping. It was really a big mega scheme of government for demand creation, which included incentives, which was followed by subnational schemes, incentives, tax waivers. We're trying to do two things. One, give competitive advantage to EVs, and to reduce that upfront burden on costs, or make a lot of time we talk about TCO. It was really talking about ACO, which is affordable cost of ownership for a new segment of vehicles, which is it happens to be electric vehicles. So I think policy has played a very important role. It has also eased market entry. So today, if you're talking about business investments getting into EVs, again, policy and regulatory framework has done so much to remove the entry barriers. Some months back, some years back, we were not even allowed to have ride sharing services. We're talking about e-bike sharing and so many models. So I think EVs have given us that opportunity, because the mindset even of the policymakers, regulators is very different when it comes to EV. So they are ready to remove those entry barriers that have been there for 50, 60 years. So it has really opened up the market, and now different players can think of different innovations, different business models that they can offer. I still believe there's a lot policy needs to do. There are segments in all markets, including India, which have not opened up, which have not got policy attention. Freight is one. We've hardly touched electrification of freight. And second is the charging piece. Again, some things are happening, but really we need a much bigger understanding of how to really accelerate charging solutions from a policy factor.
Yeah, very interesting, Akshama. Helen, you want to share quickly, and before we move to the audience Q&A, I know there are a lot of interesting questions waiting for us to be answered.
Yeah. I'm going to make a similar comment about reorganizing the slices of pie in this pie. Because in my view, the smallest slice of pie, the yellow one about citizen movement and awareness, is actually almost synonymous with the big orange slice on tech and business innovation. Because some people ask me often, what do you think the hardest thing about getting technology to work is? And my answer is always people. Right? The technology itself is usually just a matter of figuring it out, but then getting people to adopt that technology, and especially in emerging markets where there may be a lot of work to be done on raising customer awareness, customer education, things like the fintech affordability question that we addressed earlier, distribution. That's the really hard part in specific to emerging markets. And so if you overlay the yellow slice of pie over the orange slice of pie, I think that actually gives you a more accurate picture here.
Very interesting. I think it's insight from each one of you. So we can use last few minutes for Q&A. If we can have the first question from the audience on the screen, please. So here's the first question. If India's EV story is reliant on lithium, don't you think the country is trading external reliance on oil with external reliance on lithium, given the country imports and will still have to import both going forward? What about the alternative battery chemistries, example, sodium?
Should I respond?
Yeah, please.
Okay, so the problem is everybody assumes these batteries are stuffed with lithium. A typical moped, typical bike in India will have about, till last year, I would say about $24 of lithium rated mineral in it. And prices have spiked up, so it's probably like $50, $60 right now. And that's the entire amount of lithium in it, versus fuel imports before taxes, which will amount to roughly about $200 per year. I think it's not even a comparison. For a useful life of 7 years, you're talking about $1,400 worth of fuel import versus possibly $50 worth of lithium. I think it's okay to take $50 worth of lithium.
I think it's a good insight, right? I think the amount of lithium which goes in the battery is not as significant as it appears.
I think also we're seeing a lot of battery circularity offers being developed across India. And I think there's so much technology, so much innovation happening that even if we're not a net producer of lithium, in terms of, let's say from the mines, India is producing a lot of lithium via circularity offers. And I think that needs to be encouraged even more to be able to ensure a sustainable supply, to encourage more and more electrification, not just transport, but in other sectors as well, but also looking at new battery chemistry technologies. And I know that's underway for both large and small companies.
Absolutely. And I'll
Siddharth,
just kind
I'll
of
just
mention briefly Ascend Elements, which is TDK Ventures portfolio company on battery recycling, is playing a big role on this.
Yeah, just wanted to
Great.
add one quick point there is that one piece of statistics India's oil and import bill was $115 billion last year. That's actually one fourth of our annual expenditure as an economy, as a country. So with electrification, you are freeing up that money to invest in so much more in the country. That's where we're coming from.
Yeah, indeed. Can we move on to the next question, please? Great. So the next question is, are you seeing much more government support or subsidies to fuel growth? The US has passed recently the Inflation Reduction Act and will bring in a massive amount of non-dilutive capital to companies in this space. Anything similar happening in India?
I can quickly respond.
Yeah, this is right in the policy
Yeah.
game of yours.
So I think we have similar amounts of investment and support coming from public budgets in the form of we have a central scheme to incentivize EVs. We have recently production linked incentive schemes for batteries for the automotive sector. All of it is amounting to close to, I think, 7.5 to $8 billion of public funding coming to support their demand creation and their manufacturing. We're also seeing a lot of waivers, if you account for that, in terms of taxation waivers in the sector, which will also amount for public money being put into the game makers. So we do not have an equivalent of an IRA in India, but a lot of domestic policies that are supportive of manufacturing of EVs and demand creation for EVs.
Very interesting. Can we get next question, please? How much are the emerging markets thinking about making the grids that can power things like EVs more climate friendly, that is transitioning off fossil fuels to power the energy grid itself? Helen, you want to pick this one up?
Sure. I mean, just with my Kenya lens that I mentioned earlier, some of these grids already are very green, and so have hydropower, geothermal powering the majority of the grid, 75%, I think I mentioned earlier, in Kenya. So the irony is charging an electric vehicle in Kenya is currently cleaner than charging that same electric vehicle in the United States or in Europe, because there just isn't that same reliance on coal and natural gas and all of that. I guess the short answer is that some of the countries we work on it are already there to a large extent.
Great, fantastic. And I know I think things may be different in different geographies across emerging markets. I know in India may not be as green, so I think we still need to evolve at a much greener grid to enable these green solutions. I think this kind of brings us to an end to an amazing panel session. So I want to really thank each one of you, all the panelists, for sharing their very candid opinions. I know we double clicked on a lot of the opinions around charging, swapping, which is such an exciting debate to always have. With that, I would highlight a few of the very interesting startups who are working in the electrification domain. And this is just a shout out to all the early stage innovators who are doing some very amazing work in electrification, in the storage, in EV charging, and would love to see more of the innovation happening in this space as we get more capital and investments from each one of us in this category. We want to thank all our partners and all our support people and partners in this space. We have great partners, as you can see on the screen, from Climate Fund, from SOSV, who are very active supporters of us in this TDK Ventures event. So a big thanks to each one of our partners for supporting us in this whole session. A big thanks again to each one of you. If you would like to watch some of the sessions online, in case you missed it, we do have all the recorded sessions on the AirMeet platform. Please stay tuned for all the next upcoming sessions for the TDK Ventures Energy Week. There are a lot of interesting sessions and panel discussions coming up. So we are sure a lot of you would join us in those discussions. So with that, have a great evening and a great morning and a great day ahead. And I look forward to seeing you again in those sessions. Thank you.